Hello guys, this is Punit. I know it's been long. I was busy with a lot of things, and finally I put up a course together and easier way to explain everything to new traders and beginners. I've had a lot of questions about how to assess the current market phase and how to trade and change the trading style according to the change in market structure or phase. So I did design a course, and most of it will not most of it, at least some part of it will be free on YouTube. I'll be posting all the tutorials necessary to train your eyes and get used to it. Also on the WhatsApp community, I'll post the end of day chart relevant to that drills so that you can study them and build your own systems if you want to. There is also a paid course, but I don't recommend you take that because it's not necessary unless you want hand holding and getting used to that system and learning how to make your own systems, many other things. So I hope you enjoy the first or the 0th class of the course which is coming ahead. Okay, then. The entire course is based on breakout and follow through and pullback trading systems. So I'll slowly explain what those two means. But to begin with, let's understand what a market is. A market is something where you can buy or sell. That's it. And it has only two states. It's either trending or it's in a trading range. What do I mean by trending? It's either going up or it's going down. That means it's trending, or it's stuck in a price range. Let's say 110 rupees to 120 rupees, and it's range bound in that price range. Then it's trading range price action.
Yes, yes,
Okay.
everything is
Yeah,
clear. You are
Punit, good,
audible.
good.
Yeah, sorry. Two states in the market, that is trend and one is trading range. Now within the trend, there is a breakout phase and there is a channel phase. What is a breakout phase? Suppose the price is stuck between 110 and 120. We are calling it as a trading range, right? Price is trading in a range, so trading range. Now once price breaks out or breaks below this trading range, that means if it's breaking out of 120 rupees and going higher, or it's breaking below the 110 rupees and going lower, we call it a breakout. So this one phase within the trend phase. The breakout has the highest momentum, meaning it will move fast within a shorter time frame. Let's say price moves 10% in 1 month, but during this breakout phase, it might move 2-3% within a day. I'm speaking about stocks. So this 1 day momentum is so high and it's so strong, we call it as a breakout phase within the trend phase. Next, when the momentum subsides, but it's still heading higher, slowly going higher, we call it a channel phase. It's not as strong as the breakout phase, but it's still heading higher. I hope this much is clear.
Yeah.
And again, once the channel loses more momentum, it tends to go into a trading range. And then again, the cycle repeats. It will again break out, channel, and again trading range. So there is a transition phase between a breakout phase and a channel phase. Why? Because there is a huge amount of momentum within the breakout phase, and in the channel phase, as I mentioned, the momentum subsides, although it's heading higher. Or if the breakout was on the downside, then price is heading lower, right, in the channel phase. So the momentum is lower than what price experienced during the breakout phase. So the transition between the breakout phase and the channel phase is called as pullback. Now, what is pullback? It's just a pause in the breakout phase. Okay, just to see what a breakout and pause is. This is not for you to break your head around right now, just to understand. Let's say this is a breakout, this is a breakout, this is a breakout. This momentum is slow. Why do I call it as a slow momentum candle? If you see
Your
this,
screen is not visible.
oh, okay.
Yeah, yeah.
Oh, sorry, I haven't shared my screen. Is it visible now?
Yeah.
Yeah,
Yeah.
okay. So just to call this a breakout bar, this is also a breakout bar, this is also a breakout bar. I'll call this a slowdown bar or a pause bar. So, okay, why do I call this a pause bar, or why do I call these three bars as breakout bar? I'll explain later. Just to understand what I mean. This is a breakout phase. You experienced a pause, or the price experienced a pause. This is where the pullback started, or this is a reversal bar in the same direction of the trend. Don't get confused with the terminology. I'm just saying because I have to say. So once that pause sets in, that is where we call it a pullback. That pullback will give rise to a channel. If you see here, price is moving vertically, almost vertically. But after the pullback, let me mark this one. Price started to channel. Channel is just a trading range, but it sloped upwards or downwards. Here it sloped upwards because the breakout was on the up direction. Where is the So this was the breakout phase, this was the pause, and this pause led to a channel phase. Price is still heading higher, but if you compare the momentum from here to here, it's so strong. But after the pause set in, the momentum has subsided, but it's still heading higher. Is this much clear?
Yeah, good.
Yeah, okay. Now we always have to be clear about the trend's direction. So Elbrooks has coined a term called as always in direction. If you have to be in the market, participating in the market right now at this instant, would you be buying it or selling it? That is the always in direction. If you are buying it, he will call it as always in long. If you are selling it, he will call it as always in short. Okay, that's just a terminology. I'll send the notes later. You can revise if you want it. Now, why is this always in direction important? Here we are getting a directional breakout in the upward direction. So it's better to buy here and not sell or think about sell.
Which is the buying point?
Don't worry about those things. It's just the theory. First day is just about
Okay, okay.
terminology, theory, and other things. If you have to buy at any point because it's a bull breakout, okay, what do I mean by bull and bear is if price is heading higher, it's bullish. If price is heading lower, we call it bearish. It's just a terminology, fancy terminology. Or you can call the bullish
Okay.
side as a long side. They call it long side, and bearish markets as a short side. Now, as you can see, price won't just always keep moving vertically. It has pauses, it will channel, it will transition, then continue higher or lower. Now, how to call it is it has a uptrend or a downtrend. What do I mean by uptrend? Bullish trend. The price should head higher slowly, right? Yeah, this is a uptrend, but how to call it an uptrend or a trading range or a downtrend? Just basically, not to break your head about it. This is a Okay, let me come here somewhere. Let's say we are here and we haven't seen any price action further. Price was making uptrend, right? Price is heading higher from here to here. If I have to mark it, price has headed higher. Now, price has started to go lower suddenly. But what was the major trend up till this point? Price was heading higher. So this is the first attempt to change that direction. The previous trend has been uptrend, and the recent price action is telling you that this is the first attempt. I want to change the behavior of the previous trend. This much is clear, right? There is always a first attempt, and the first attempt might lead into a trading range, a breakout in the same direction, that is uptrend, trading range, and then again a continuation. I know this is a bit confusing. let's say price didn't go down here. Okay, this it made a move down here, and instead of going further down, it ranged somewhat in this price box itself. Okay, suppose price went and did a zigzag within this price range, we call it a trading range, right? So how do I or you find when when there is a change in character coming? Within the bull trend or upward direction phase, if we see, price will make high, and the price will go beyond that high, right? So if I have to call this as high point one, high point one, which was the next high point which went beyond this point. This is the second high point. High point two. This is high point three. This one is high point four. So the price is making consistent higher highs. What do I mean by higher highs? High point two is higher than high point one. High point three is higher than high point two. High point four is higher than high point three. So the current high, suppose we are here, which is high point two, is all we have seen. High point two is the current high and it is higher than the previous high. So higher high. Again, high point three got printed and it is higher than high point two. So higher high, higher high. Again, high point four got printed and it went beyond the high point three. So higher high, higher high. While this is happening, we should also see what low point it's printing. So let's say this is low point one, low two. This is not a major pivot, but just to explain, low three. This low, let's say price is here, low two is higher than low one. Again, low three is higher than low two. So price is making consistent higher highs along with higher lows. The current low is higher than the previous low. Suppose the price was here, this is the current low, it's higher than the low one. So price is making higher high, higher lows, and this pattern, higher high, higher low, is what they call as bull trend. Price is making higher high, higher lows. Okay, now coming to bear trend, it will be the opposite. This is the high one, I mean high point, right? High one, high two. Here what was happening in the bull trend, high point 2 was higher than the high point 1. But if you see, high point 2 is lower than the high point 1. The same thing happens with the low points. As you can see, low 2 is lower than low 1. Low 3 is lower than low 2. So this will be lower high and lower low. Here it was higher high and higher low. In the base structure, it will be lower high and lower low. Now, why this is important? Once, see, let's say we are still here, price is making higher high and higher low. So we are calling it as a bull trend. Once it does something to violate the structure of higher high and higher low, we can say, okay, the structure is not valid anymore. There might be a change further. When does that point come? If it's going beyond high point three, then it's still in a higher high, higher low structure. But once it violates the low point three, once it violates or goes beyond this low point three, then we have to be worried. Why? Because it should be printing higher high and higher lows. Now all of a sudden, instead of putting one more higher low, it is going beyond this higher low 0.3. That is when we call there is a change in character. Now, this change in character can lead to three outcomes. Either it can go into a trading range for a long time, or it can just go into a trading range for a short time and then continue to make higher high, higher low, or it can break down and form lower high, lower low structure. Price can only do two things. Either it can trend or it can be in a trading range. And even in the trend, it can either go high or go low. So always only these three options are there. But once we know that there is a structure in place, higher high, higher low structure in place, and we know that the recent low got violated. What do I mean by violated? This was the recent lowest point. Once price went beyond this low point, we call it violation of the low or violation of the structure. So once there is a violation in the structure, there is a change in character. That change in character can be just price stuck in a trading range or consolidate. What do I mean by consolidate? Price spending some time within the trading range and then either breaking out on the up direction or breaking below in the downward direction and then trending in the either direction accordingly in the breakouts direction. Is this much clear? If you have any doubts, ask them now because this is important.
Yeah, got it. I understood.
Okay. Now for the market theory, is this much clear? Suppose I take you to some day here. This was the high. This is the new high. This is the okay. Let's say we are here. This was the high. This is the new high. So this is a lower high than the previous high. Lower high structure, and this is the recent low, and this is the current low. So this is lower than this previous low. Lower high, lower low. Again, this low and this low, if you compare, the current low is lower than the previous low. Again, lower high, lower low structure. If you go back in time and just practice this, you will be clear when the market is in a downtrend and when the market is in an uptrend. Even the trading range, you can it's visible if you okay here. Price was heading higher slowly, making higher high, higher low structure here during this phase. From here to here, I mean higher high, higher low, higher high, higher low, higher high, higher low. Now I told that price can consolidate at times after a breakout or a uptrend, right? This is a small consolidation. It's in a trading range. If I have to mark a box around it, price was just zigzagging within this price range for many days. This is a daily time frame chart. So each candle is showing that day's price action. I'll explain what candlestick chart is. So give me some time. So this was 30 days of trading. And during those 30 days, price has just been a range bound. Price has just been in a trading range. So this, once it breaks out, we call this as consolidation or a trading range and then breakout in the upward direction and then price headed higher again. Higher high, higher low, higher high, higher low, higher high, higher low. Now, since SOAS is just starting to trade, I'll have to go down uh, right to the basics. So let me start from candlestick theory. Basically, SOAS, there are many kinds of charting styles and also softwares. There is line chart, there is bar chart, there is candlestick chart, there is Heiken-Ashi, Ichimoku cloud, so many things. If you come here and see, there is the line with marker, step line area, high low close area, baseline, footprint charts, Renko charts, line break charts, Kagi point figure, range charts. But people use mostly candle charts and bar charts or line charts. if I have to come to a line chart, what it's showing is, if you see my cursor, this is Friday 10th May of 2024. So the line chart is showing me this is the price on that day, which is closing price is 5246.25. How do I know that? It's showing here on the top and top right corner, top left corner. So on May 10th, it was 5246.25. That is the closing price of the market. It is only plotting the closing price of the market. In Indian markets, let's say the market opens at 9:15 a.m. Hello.
Yeah.
Okay. So let's say Friday 10th on May 2024, Indian markets open at 9:15 a.m. and closes at 3:30 p.m. No matter what price the market opened at is irrelevant when it comes to line chart, because it's only plotting the closing price of that day. So whatever price the market closed at, or the market was trading at 3:30 p.m. is the closing price of that day. So that day, here, let's say it closed at 5246.25. I'll put a dot here and then join that line to the previous close. It's just a graph, right? You'll take the value of x and plot it, I mean y, and plot it. That is what it's doing. Is this much clear?
Yeah.
Okay. Now, when it comes to bar chart or candlestick chart, both are very similar. There is no different, just that there is a slight variation in how they are represented. This is bar chart. I don't like it visually, so I prefer candlestick charts. And this is most widely traded chart charting style. Now, what is this? How is this different from a line chart? Is it has 4 data points. The line chart had only the closing price of that day printed. Here, not only the closing price, the open price, the lowest price the price experienced within that day, the highest price the market experienced within that day. All 4 data points are plotted. Now, there are two colors, white color candles and black color candles. What do they mean? One is closing on the upside, one is closing on the downside. What do I mean by that? If price is opening here, let's say, let's take Friday 31 May 2024. The opening price of that day was around 5250.50. Okay. The closing price is 5295.50. Since the closing price is higher than the opening price within that day, it means price went higher. So that day's price action was bullish. That is why we got a white candle. Here, what's happening is the opening price is higher than the closing price. Let's say it opened at 100 rupees, but it's closing at 90 rupees. That means market fell during that day. That is why a bearish candle, and the bearish candle color I have chosen it to be black. You can change it to red or whatever color you prefer to. I just want to take out the emotions from trading, so I keep it black and white.
So that means like if the price is from high to low, it will be in black. And if
Yeah,
it's going the
if
opposite, it will be in white.
yeah, just keep in mind there are 4 data points. Opening price at
Mm-hmm.
9:15 morning, at
Mm,
what price Indian markets opened at. Let's say it
mm.
was 90 rupees.
Okay.
Then at 3:30 market closes. During that time, what was the closing price? Let's say
Mm,
during that day it was 95.
mm.
So market opened at 90 rupees and now the market closed at 95, which means
Okay.
it headed higher
Correct.
during that day.
Mm.
So it is painted with white bar.
Okay.
It can be green bar or whatever color you want to choose. You can change the setting and change it later. Okay. So that is saying to you that market opened lower, but it closed higher, which means it's heading higher during that day. Here, what is happening? 9:15, it opened at, let's say, 80 rupees, but it
Mhm.
closed at 75 rupees. So it headed down.
Okay.
Okay. Now, these are the two data points within the four data point subset. How about high and low? If we see this day's candle, there are four data points it's showing. This was the open, this is the close. Okay. This is the highest price it experienced during that day. Let's say it opened at 90 rupees. It closed at 3:30 p.m. at 95 rupees. But within 9:15 to 3:30 p.m., price also had a highest point of 99 rupees, let's say. So this point is 99. Highest price within the day the price experienced or the market experienced. What do I mean by that? Let's say from 9:15 to 10:15, price went slowly from 90 to 92 rupees. And from 10:30 p.m., 10:30 a.m. to 11:30 a.m., price just went up very strongly to 99 rupees. Still, we haven't gotten to 3:30 p.m., right? So price might come down, go up, do whatever it wants. That is why you see the highest point and the lowest point within that day also, along with open and close price. Is this much clear?
Yeah.
Okay. Here also, this was the highest price and this was the lowest price which market experienced during that day. If I have to mark it, this was the highest price, this is the lowest price. This was the open, this is the close. So in short form, since the data points are open, high, low, and close, they call it OHLC abbreviation. That is why you see here OHLC. If I keep the mouse here, you can see that open price was 5268.5, high was 533.7.25, low was so much, and closing was so much. Ignore the rest percentage values and difference values. Those are not important. Now, do you have to worry so much every 5 minutes when you're trading intraday about all these values? No. Once you get used to it, see, visually, you know, this is a white bar. So white bar means it is heading higher. That's all. If it's a black bar, it's headed lower during that time frame. Okay, now what do I mean by time frame? Here I told this is 1 day time frame. That means since the market got open at 9:15 and closed at 3:30 p.m., whatever price did, we have the four data points: open price, close price, high price, and the low price. Now, since we are trading intraday, let's say I want each candle to represent only 5 minutes of data. Here it was representing one trading day, that is 9:15 to 3:30 p.m.'s data. Now, if I jump to 5 minute time frame, each candle, let me come to Nifty. Okay. So this is 9:15 a.m. This is where the candle or the market got open. If you come to the next candle, this is candle 1, this is candle 2. Here on the lower, uh, here it will come here. 9:15 a.m., 9:20 a.m., 9:25 a.m. I hope you got the gist. Each candle is showing 5 minutes worth of data. During that 5 minutes, what was the highest price the market experienced? What was the lowest price the market experienced? Where did it open and where did it close within those 5 minutes? So this can be 10 minutes, 15 minutes, 30 minutes, 1 hour, 4 hour, 1 minute, 2 minutes, whatever they want to choose. It, some trade only on the weekly time frame, some trade only on the daily time frame, some only on the 4 hour, some on the 1 hour. It depends on the individual trader and the trading style which they adopt to. Is this much clear now?
Yes.
Okay.
Yes.
Okay. Now, how to assess the strength of each candle? What do I mean by that? Suppose the market opened at 90 rupees during 9:15 a.m. We are talking intraday chart only from now on. That is 5-minute time frame charts only. Let's say the market opened at 90 rupees at 9:15 a.m. Now from 9:15 the prices fell down to from 90 to let's say 85. So the price is heading lower. 90 was the open price, 85 was the closing price. Now if the highest price was also let's say 90 rupees only, and the lowest price which the market experienced was also 85, then it will be a solid bar. What do I mean by solid bar? Okay, let's say, okay, mm, if you see this candle, this bull candle, let me explain with diagrams, that will be clear. Forget that previous explanation. If you see here on the top left corner, the opening price and the low price are almost same. 24835.35 is the opening price. The low price, which is represented by letter L, 24835.25. It is just 10 paisa difference. The market, since it opened, only went 10 paisa lower before it went and closed higher. So this is showing strength. If the market was weak, so suppose you take this candle, let's see the opening price. Opening price was 24824.80. The lowest price was 816.45, 24816.45. That is 8 points. That is 8-point difference from the open. So once the market opened during 10:20 a.m., the price went all the way from 824.80 to 816.45. Of course, it went up and closed on the higher price. That is why you got a bull body or a white body. But is it showing strength? There was no demand as soon as this candle opened. Here on the other side, as soon as the candle got opened, price never went lower. It did went lower like 10 pesos or something, that is insignificant, and then it headed higher. But if you see here, it went all the way down here and then headed higher. So from comparing these two candles, this candle and this candle, which is stronger? This one, right? Because it never went lower during that 5 minutes time frame. Is this much clear?
This is clear. Yeah.
Okay. Now, how to assess the, okay, we were assessing the low and open of the bull candle. What do I mean by low and open? This was the open, this was the low. For this candle, this was the open and low was only 10 paces below, so it will be similar price. We call this as tail. This distance, what you see here, from open to low of a bull candle, it's called as tail. Now, similarly, from close to high of a bull candle, is called as wick. For a bull candle, the price difference between the open and the low is called as tail. The price difference between close and high is called as wick. Okay. There are two more terms, range of the candle and the body of the candle. The range of the candle is the distance from high to low. So this is the highest price the market experienced during those 5 minutes and the lowest price. So the difference between those two is range. The difference between open and close is called body. BOD by body. Now for a bear candle, the distance between open and high is tail. This distance is tail, and the distance between close and low is wick. Why do I have a different terminology than others? Is because of other reasons. I'll explain them later. But for Suhas, this is the terminology you will follow from now on. Is this much clear?
Yeah, I'm clear about this. Yeah.
Yeah. Now, how are these data points important? The distance. Let's say we are here, somewhere here. This candle, 11 a.m. candle. This was the open, which is also close to the below. Actually, here if you see, it was 830.85 open and 830.85 close. Sorry, low. So both were exactly same. This is the high point. This is the closing point. This open to low, there is nothing. So there is no tail. From close to high, there is a wick. And the wick is significant to the range of the body. What do I mean by significant to the range of the body? We cannot sit and measure every candle to assess its strength. We have to do it visually. Looking at this candle, it opened all the way down here at, let's say it opened here, right, at 11 a.m. Let's say at 11:02 a.m. price went all the way up here. But instead of staying somewhere here and closing strongly, it again retraced back to this point and closed at some point y at 11:05. This is 5 minute time frame candle. So each candle is only telling you the data of that 5 minutes. Is this much clear?
Yes. Yeah.
Okay, now I'll use two terms, negligent and significant or comparable. What do I mean by that? The tail is negligible. Here it's non-existent actually, because the open price and the low price of this candle was exactly same. So there is no existence of a tail. The smaller the tail, the better, because price did not go below the opening price much. Now, what do you compare it with? I'm saying negligible, or it should be non-existent. Negligible when compared to the range of the body of the candle. What is the range of the candle? Highest price and the lowest price. When you compare the tail of that candle to the range of that candle, the tail should be negligible or non-existent. Is this much clear?
Yeah. Okay.
Huh. Next, coming to wick. The wick should also be negligible or non-existent. Why do I say that? As I explained, price opened at, let's say, 100 rupees. It went all the way up here to 110 rupees and then closed here at 105 rupees. That means the highest price was not how do I say? each at each price point there are traders trading, either they are buying or selling. If there is a consensus that yeah, this price is reasonable at this time, then price has to close at that point, right? Let's say it went up to 110. If all the if all the traders both buying and selling were in a understanding that okay, it's reasonable for the market to be at this price at this point in time, then the market should have closed here. But instead, what happened was the traders who were buying suddenly started to sell, and the sellers who were also waiting for an opportunity to sell and take the market lower, they also sold. That is why you see the drop in price here. This means that wick is representing that weakness. So how do you gauge visually? The wick should also be negligible or non-existent when compared to the range of the candle. I'll send those notes later on. Don't have to worry much about it. Now coming to a bear candle. Let's take this candle. The open price was 874.50. The highest price was also 874.50. So this candle has no tail. But if you see, there is a huge wick. From close to low is the wick of a bear candle, right? Since you have a huge wick which is comparable to the range of this candle, we call this a weak closing candle. Now, how do I see a strong closing candle? Here is one example. This was the open, this is the close. There is a small wick on the bottom and a small tail on the top. Both are very negligible when compared to the range of the body, so I call this a strong candle. Here is one more example. Yes, you can see the tail is a bit large, but it's still negligible when compared to these huge wicks or tails. So this is one more strong candle, one more strong candle. On the bullish side, this is one more strong candle, one more strong bullish candle, one strong bearish candle. So is this much clear?
Yeah, got it.
Okay. Just like how markets can be categorized as a trend or a trading range, each bar is now can be I mean, each bar can also be categorized as a trend bar or a trading range bar. What do I mean by that? If it's a strong bar, then it's a trend bar. If it's a weak bar, it's a trading range bar. Why do I call it a trading range bar? See, this was a strong bear bar. Price opened here, closed here. It's showing significant strength in the downward direction. The next bar, if you see, it opened here, closed here, but the lowest price during those 5 minutes was all the way down here, and the highest price was all the way up here. So during those 5 minutes, price, since it opened here, might have gone down here, went up here. I'm just showing, just imagine price going down the way here, and then coming up here, and then going all the way up here, and then closing down here. What was that price action? It was not directional, right? It was not just heading smoothly downwards or smoothly upwards. It went down and then retraced all the way up and then somewhere closed down here. So that is trading range price action. It is range bound. It has no direction in it. Same way, this bar, if you see, it opened here, but it has a strong closing. It is a trending bar. It has a directional value to it. Here, although it is a bear bar, which means the price opened at a high point and closed at a low point, due to the fact that we have high and low data points, we now can say that during those 5 minutes, there was no direction or directional momentum. So this bar is called as a trading range bar. So every strong closing bar, be it bear bar or a bull bar, is a trending bar. Every weak closing bar, be it bear bar or a bull bar, is a trading range bar. Is this much clear now?
Yeah, I got it now.
Let me know when it gets too confusing or too much to understand, because I know as a beginner it is too much to take in.
Yeah, so now I think I'm good understanding.
Okay. Okay. Now I told the market shifts from a breakout phase to a pause or a pullback phase, and then a channel phase, which then later on transitions into a trading range phase. And this cycle continues. How to identify a breakout? Now, uh, there can be n number of breakouts happening within one 5-minute candle, because not every trader is looking at the same thing. They can be employing lakhs of strategies. They can be saying, okay, if price breaks down below 100 rupees, that is where I call a breakout. Somebody might draw a line, some sloping line from here to here, and say once it breaks down this line, I will call that a breakout. Some can say, okay, this is a somewhat like a, let me mark it out. Okay, they will call this as a trading range. Price was stuck within this range, and once it broke out of that range, that is when they call a breakout. And you can see this, there is a line or a curve with a gray color. That is an exponential moving average. What is the difference? Okay, what does it mean? It can take multiple values. Okay, if I open that indicator, it's asking the length. Now here I have given it as 20. What does that mean? Let's say from here to here there are 19 bars. Actually it is 20 bars because it will leave one candle while marking that drawing tool. So from here to here there are 20 candles. Now this candle's closing price is, let's say, 100. Here it was 95. Here it was 102 something closing price, I'm saying. If you just use a simple moving average, it will only calculate the basic average of the last 20 bars closing price and then plot it. Okay. What exponential moving average does is it will give more weightage to the recent bars within those 20 bars. So it is a bit faster than the normal moving average. They call it moving average. It's just the average of the closing price of those candles. And exponential moving averages, it's giving more weightage to the recent bars closing price than the previous bar's closing price. That's all. So traders can also be saying, okay, once it breaks below the 20 period moving exponential moving average, that is when they call a breakout, or breaking above that moving average, that is when a breakout has occurred. So there can be multiple definitions for a breakout depending upon the individual trader's perspective. But are they wrong? They're not. They're right in their own aspects. So every bar is breaking out of something, every bar is failing to break out of something. This is a general definition. Okay, I'll come to the definition in accordance to our strategies or systems later on. Just to give you a picture of what breakout means is what I'm trying to say. Now, every trend bar is a breakout bar, is what Elbrook says. Why? Because it's showing strength directionally during that time frame which you have chosen. For our systems, we have chosen 5-minute time frame. So during those 5 minutes, if you see this candle, it was a strong closing bear trend bar. So this bar is also a breakout bar. The next bar is a trading range bar. So it's not a breakout bar. This was a strong closing bull bar. So this is a bull breakout bar. The next bar was a small bear bar. And it's not so strong also, and it's closing right where it's opening. So it's not a breakout bar. The next bar is also not a breakout bar. Why? There is a huge wick on the top and also huge wick on the bottom when you compare its own range. Next is a strong trend bar. So breakout bar. Okay. Now is this much clear?
Yeah.
Now let me come to what a spike is. A spike is a breakout phase where the momentum is the strongest, even with some small pullbacks. That small pullbacks are okay. When is the breakout phase ending? When there is a pause in the trend or the breakout. How do you see the pause? There are 6 different ways where you can categorize it as a pause. I'll come to that later. Let's not go into that right now. But if you find 6 different kinds of pauses, then I'll call, okay, the pause has been set in. Next, let's see how fast it will continue to go higher. Suppose I'm talking about a bull breakout. This was a pause. It took only 2 bars. This was a pause bar and this was a second bar. So it only took 2 bars to go beyond the high of this bar. This was a bull breakout bar. This was the pause bar. This was the bar next to the pause bar. If it takes more than 3 bars to go beyond the high after the pause has set in, I'll call it as a pullback. If it crosses before the third bar or on the third bar, I'll call it as a micro pullback. What will I call it as a micro pullback or a pullback? The pause
Please
bar.
tell this again.
Okay. This is a bull bar closing on its high. So this is a strong closing bull bar, and so it's called as a trend bar. And now it's also a breakout bar because every trend bar is a breakout bar. I'll call this as a breakout bar. Now, once the pause sets in, if the high, whichever is higher, the pause bar's high was higher or the breakout bar's high was higher, whichever is higher. Here, if you see, which was higher, instead of this, let's come to Hemini. It will be much simpler. Okay. Huh. This is a strong closing bull bar, so this is a breakout bar. This is a weak closing bull bar. Why do I call it a weak closing bull bar? There is a huge wick, high price to the high price to the close price is the wick of the bullish candle, and it's comparable to the range of the candle. So I'll call this as a weak bull bar. And since it's not a trending bar, it's not a breakout bar, it has to be a pause bar. So this is a pause bar. Now, which price is higher within the pause bar and the breakout bar? This is the highest
Pause
point.
bar.
Yeah. So this is the pivot. Pay more attention now. This is the pivot. Why do I call it the pivot? Suppose this pause bar was with somewhere here, and the highest point between the breakouts high and the pause high was in fact only breakouts high. Then I would call this as the pivot. Since this pause bar has the higher high than the breakouts high, this is the pivot. Okay. Now, if including this pause bar, the price moves beyond the pivot's high within 3 bars, then I will call this pause as a micro pullback. If the bar fails to move beyond this pivot within 3 bars, including this pause bar, bar 1, bar 2, here the bar 2 went beyond the high. I'm saying if this bar, the bar 2 also didn't go beyond this pivot, bar 3 also didn't go beyond this pivot, then I'll categorize this pause as a pullback.
If it goes beyond this pause
Pivot.
bar within 3 bar, then it is called pullback, correct?
If it goes beyond the pivot within 3 bars, then it's micro pullback. If it doesn't go
It's
within three
micro
bars,
pullback.
then it's pullback. If it's taking more time.
Okay, okay, okay.
Okay. So is this much clear?
Yeah, I understand now.
Okay.
Hmm.
Mm-hmm.
Like this bar on the left side, this big bull bar, more
Yeah.
left, think 0015. Yeah.
Huh.
So this is a breakout bar.
Yes.
Then
This is the pause
next
bar.
one, two, three, all is pullback.
Yeah. This pause, this is the first pause bar. This is the pause bar.
Yes.
It should be going beyond this high. Did it go beyond this high? How many bars did it take? One, two,
You
three,
will
four,
you will
five.
choose the breakout bar high.
Yeah, sorry, yeah. Whichever pivot is higher. So this is the pivot. One, two, three, four, five, six, seven, eight. It takes 8 bars to go beyond the pivot. So which is stronger? Micro pullback or pullback?
Pullback.
Pullback,
Okay.
right? Micro pullback, right? Because it's taking lesser time and showing strength in the direction of breakout.
So it is pullback or micro pullback. One second. In the 0015 candle,
Huh?
the one, two, three, four, five, six, seven, eight, eight. So these four bars are pullback, correct?
This entire region is the pullback structure,
Yeah. Okay.
and it took 8 bars to go beyond the pivot high. So the
Okay.
pullback count is 8 to the completion.
Okay.
Don't get confused right now, but just understand it took 8 bars to complete the pullback.
Okay.
And in the micro pullback, what I'm saying is within 3 bars, including this bar,
Including the pause
including the
bar.
pause
Okay.
bar. Here, the pause bar is here. So one, two, three. If the third bar went beyond the pivot, then we will call it as a micro pullback. Now,
Okay.
yeah, now Elbrooks calls breakout or spike with the same terminology. What I'm trying to do is breakout. This is a breakout. Then there is a pause. And if there is only, if we can categorize that pause as a micro pullback, that means it is showing strength. I'll call that as a spike. What do I mean by that? This is a pause bar. This is again a continuation. This was the breakout candle. I'll call this entire thing as spike. This is the breakout candle. This is a pause bar. Since the next candle itself went beyond the pivot of this candle, this is a micro pullback. So this is still in a spike. Okay. When will the spike end? Once there is a pause bar, which can be called as a pullback. When do we call it a pullback? If it takes more than 3 bars to go beyond the pivot, then we will call it a pullback. So if you see here, this was still in a spike, breakout, pause. This is a micro pullback, again a continuation. So we are still in a spike phase. Next again, a pause candle came in. One, two, three, four, five. Here, which was higher, both were same at the similar price. So this will be the pivot. It took us 5 bars to go beyond this pivot high, right? So I'll call this pause as a pullback, and the spike ends once the pullback bar is printed. We'll categorize a pause as either micro pullback or pullback. Since this was a pullback candle, we will call this that we call that spike has ended. Now again, one more spike we got. This was a breakout. So spike 1, pullback, spike 2. Here the leg counting gets easier. There are much more explanations and drills to practice that. I'm just saying because you know a bit more than him. And even for you, there are a lot more things to observe. But I hope you got the gist what micro pullback and pullback is and how to differentiate those two.
Yes, I got
Huh,
it.
okay. What else is there? Now, is breakout and spike clear to both of you? For Suhas, there might not be any doubt because he's new, so he'll understand what I teach him. But since you already follow Elbrooks, if you have any doubts, please ask Ishank.
Yeah. Like once I start
Yeah,
doing it, hands-on banda, na, like you'll
yeah.
understand.
Yeah, this portion, please explain again that from
Spike,
the
huh?
spike. Yeah.
Okay, let me. Okay, if you see here, ignore this just for explanation. Let's take only this part, this entire region. Now, this is a bear breakout bar. This is also a bear breakout bar. Is it strong enough? It's strong enough. Although it has a little wick, it's not as huge as the range. It is not so huge comparable to the range of the candle. Trend bar, trend bar. So two consecutive breakout bars. This is a breakout bar. This is a breakout bar. This is a pause bar, right?
Okay.
1, 2, 3, 4. It took 4 bars to go beyond the pivot.
Okay.
This was the pivot. Now, since it took 4 bars, I'll call this pause bar as a pullback bar.
Okay.
Now, what there can be n number of breakout bars and n number of micro pullbacks within a spike. But a spike is said to be completed once you see a pullback bar. How do we call it a pullback bar or a pause bar or a micro pullback bar? We should see the count, right? Here we know that it's a pullback bar. So how many breakout bars were there? 2 breakout bars. Were there any micro pullbacks? No. So I'll call this as spike 1 or spike, just spike. Okay. Now
Okay.
again, strong uh, closing bar. Although it has a huge tail, it's still closed strongly. Weak bar. So this is a pause bar, right? This is not a trend bar.
Okay.
So this is a pivot. Did it this bar go below this low? No, both lows are equal.
Hmm.
The next bar went below this low. So 1, 2, 3. Third bar went below the low of the pivot. Breakout bar, pause bar, and within third bar, the pivot got violated or it went
Okay.
beyond the pivot. So this pause is called as micro pullback.
Okay.
So here, since this was a pause, which was a pullback, I only marked this as a spike. But here, since it's a micro pullback, I'll pause till the pullback sets in. Here, when was the next pause here? This bar, right?
Okay.
What was the count? 1, 2, 3, 4. Once it's beyond 3 and it's not beyond, if the count exceeds 3 and it's not violated the pivot, we'll call this pause as a pullback. So the
Hmm.
spike has ended here. Spike 1, spike 2.
Okay.
If
Okay. So
you,
unless you get pullback, it is a spike. Eh,
yeah, it is said to be
So
in spike
micro
phase.
pullback is not the end of spike.
No, it is just a small pause in that momentum phase.
Okay. Okay.
This much is clear,
So
right?
yeah. So
Mm.
by this we will count the spike.
You can count the spike, you can draw wedges using the spike, you can do a lot of things. It will be
Okay.
much clearer. I mean, of course, everything is from Elbrooks only. I just happen to somehow form and come to this understanding, so it will be much easier for you then. Let's go a bit slowly because he has to understand also, you know. That's why I told first class is of no use to you because you already know basics.
So this spike I
Puneet,
didn't know this spike.
Yeah, but I would have told the spike again. I mean, this was just an introduction for him to get used to the terms.
Puneet,
You are saying
tell
something.
about the normal pullback. You told about micro pullback. Can you explain about normal pullback?
Yeah, this much you understood, right? Micro
Yeah.
pullback is okay. There is a pause bar. That
Hmm.
pause bar we have to categorize it into a micro pullback or a pullback. We
Hmm.
can categorize it as a micro pullback. See, back then I gave you a bull example. Here, if I gave you a bear example, because it's a bear breakout. This is a breakout bar. This is a breakout bar. This is a pause bar. Why do I call it a pause bar? It's not a trend bar. It's a trading range bar. Which low is lower? The last breakout's low is lower, or this candle's low is lower? This pause bar's candle is lower, right?
Correct.
So this will be the pivot.
Okay.
Now, if within 3 bars, including this pause bar, that means I'll count 1, 2, 3. If within 3 bars, the pivot gets violated, means the price goes beyond or lower than this pivot line or pivot point, then it's a micro pullback. If it fails to do so within 3 bars, then I'll categorize this pause bar as a pullback bar.
Okay.
For example, we come here. This was a bear breakout. This was the pause bar. Why? Because this is not a trend bar. This is a trading range bar. So this is the pivot. This low is here. This low is here. Whichever lower is lower, low is lower. That is the pivot. This bar did not go beyond this low. The next bar did. 1, 2, 3. So this is a micro pullback.
Okay.
Yeah. So the spike is still continuing. I rectangle box here, right? I just put a small rectangle because this was a pullback bar. Here, this was a micro pullback, so I'm still extending it. I'll extend it till the point we get a pullback bar. Again, next pause was here because this is a trading range bull bar.
Trading range.
This low is lower than this low, so this will be the pivot. 1, 2, 3, 4, 5, 6, 7, 8, 9. It took 9 bars to go beyond the pivot. Once it exits 3 bars, you can call it a pause bar. I'm just saying how many bars it took to go beyond the low again.
Okay.
So I will say the spike started from here and got completed here. And the spike can have n number of breakout bars and n number of micro pullbacks. It doesn't matter. But once you get a pullback bar, you call that spike to be completed.
Okay.
So pullback is clear?
Yeah, I got it.
Yeah. Now, there is a concept of resumption. Let me take an example of micro pullback. Okay, let's come here. This is a OK bar. It's not a trading range bar also. It's not a trend bar also. But if you want, you can call it a trend bar and a breakout bar. I wouldn't. This is a bear trend bar. So bear breakout. This is the pause bar, right? Because it's a weak bear bar. Breakout, bear breakout bar, pause bar, which is the pivot here. This is the pivot. Did it go beyond it? It did. But within that bar, if you see, it went beyond the high of the breakout itself. So this spike is only not valid. Here, what was happening? This was a bear breakout. Price has to head low, make lower high, lower low structure, right? This is the high point 1. This is the high point 2. This is somewhere the high point 3. Let's say that high point 2 is lower than the high point 1. So lower low. Again, high point 3 is lower than high point 2. So lower low. Lower low, lower low, lower low. Lower high, lower high, lower high. This low, sorry, this is the new low. This was the previous low. This low is lower than this low. So lower low, lower low. Lower high, lower low is the significance of a bear trend. Now here we got a bear breakout. What are we expecting? We are expecting it to make lower high, lower low structure This was the bare breakout bar. We found a pause bar. We have to categorize it as a micro pullback or a pullback depending on the count. The count was for a micro pullback, so we call this pause bar as a micro pullback bar. But if you see, the same bar which was supposed to continue and make new lower low, lower highs, it instead went beyond the high of the breakout bar. So the theory is invalid. We wanted lower high, lower low structure. But since it went beyond this, I'll invalidate this spike. Is this much clear? Hello?
Yeah, I am clear now.
Ishank, I hope this is clear.
Yes, clear, clear.
Yeah. Now, what is the new spike? It's a bull breakout, again a bull candle, again a bull candle. So the breakout lasted for 3 bars. Let me not confuse you with this. I'll instead highlight it with a marker. All 3 were strong breakout bars. Here it's a pause bar. Why? Not only it has a huge tail, the range of the candle when compared to the last 3 breakout bars is small. It's very small. If this bar is high and low is, let's say, 10-point difference or 10 rupees difference, here also 10 rupees, here maybe 7 rupees, this is only 3 or 4 rupees, so it's significantly smaller. So I'll call this as a pause bar.
Okay.
Don't worry, I'll explain what are all the 6 kinds of pause bars. Right now just understand the concepts. How to categorize them we will see later. This is the pivot. Why is this the pivot? Because this high is higher than the previous high. So this is the pivot. 1, 2. The second bar itself went beyond the high. So this is a micro pullback.
Micro. Yeah.
I'll call this MPB, short form, micro pullback. Okay. Now, this is the pivot. Why? Because this is the highest price. And this is also a weak bar. Hello?
Yeah, that is big bar. Yeah, because
Yeah,
there's
so the
no
count begins
much
here.
difference.
1,
Okay.
2, 3, 4, 5, 6. The 6th bar broke out. So this is a
Pullback.
pullback. Pullback, I'll abbreviate it as PB.
No, this the first pivot which you
Yeah,
marked as micro pullback.
yeah,
This is already broken on the second bar.
this bar, yeah,
Yeah. So it is a micro pullback, and then okay, this is again a pause bar.
yeah, exactly.
This bar. So 1, 2, 3, 4, 5, 6. Okay, so then it becomes a pullback.
Yeah.
Okay, okay. So
Now,
where is the spike? These 3 bars, 4 bars.
yes, this is spike. This is pause. Again, one more spike we got. Again, one more spike we got. If it's 3 spikes and you can draw the spikes thing, again you will get a wedge.
2, 3.
How 3 means? Okay, here if you see, this is a breakout bar, pause bar. Within that thing, it got broken out. One. So let me mark this as a spike. 1, 2, 3. So it took more than 3 bars to go beyond this pivot. So this is again a pullback bar. Spike 1, spike 2. Again, when did the breakout start? This is pause, micro pullback because 1, 2, 3. The third bar broke out and this is the pullback bar. 1, 2, 3 legs up. Is this much clear now?
So this third box is micro pullback.
No, that is also spike because it has two breakout bars, no? But yeah, this is a micro pullback. Let me mark it out. No? Sorry, micro pullback. Here the micro pullback was this bar. Now, instead of calling this as a pullback bar, it's easy to call it as a pullback initiation bar. Why? Because pullback set in due to this bar. So we call it as initiation bar. Short form will be PIB and micro pullbacks will be MPB. That is why if you see the charts which I had posted on the end of day charts, it was PIB and many other things, but concentrate only on this much right now. And in the end of day chart also, I haven't marked anything other than breakout. Okay, breakout on follow through is because breakout and we are getting follow through, and this is the micro pullback. We can trade the micro pullback, and how to trade the pullback is also marked there, but it's hard to understand for by just saying that. Give me time to explain everything, then it will be clear. So this much is clear, right?
Yes.
What else is there? Yeah, resumption. The resumption attempt. What do you mean by resumption attempt? Here, 1, 2, 3 bull bars, breakout bars. So breakout phase, this was the first pause bar. This is the pivot. Once a pause is set in, the next time the high of the previous bar gets taken out, that is the first resumption attempt to head higher. Why are we looking at the first resumption attempt to head higher? Because it's a bull trend or a bull breakout. We are expecting price to go higher. So we want to see when is the first time that price tries to move beyond the previous bar's high. Here, this was the pause bar. Which was the high? This was the high. When did it move? The next bar immediately moved. So this is the first resumption attempt. This resumption attempt is what Elbux calls as H1. Okay, high one. It's just an abbreviation. You can call it whatever. A resumption attempt is what I call for new traders because it's easy to understand. Okay, resumption. Price is trying to resume its trend, prior trend. The prior trend was bull breakout, so it's heading higher. This, okay. Only keep in mind, this is the first resumption attempt we are talking about. The second resumption attempt, I'll not confuse you with today. Now let's see.
After a pause, when the price moved up first time.
Yeah, beyond the previous bar's high. See, suppose, okay, let me come to, yeah, this. This is a bear spike, bear breakout, strong bear
Okay.
breakout, trading range bar. Then it broke out. So this was the first micro pullback, MPB 1. This is okay, decent enough closing bear bar. So let's call it as a breakout bar. This was a reversal bar. Don't worry what reversal bar this was, just a pause bar. Okay. This pause bar pivot is this. Now within 3 bars, we want the low to get violated to call this pause as a pullback. Sorry, micro pullback. If it takes more than 3 bars, then we'll call it as a micro pullback. Sorry, pullback. Yeah, forgive me. That 1, 2, 3. 3 bars have passed, and this bar is now a pullback bar. What is the low? This is the low. Did this bar go beyond this low? No, right? So there is no resumption attempt yet. Did this bar go beyond this bar's low? Not yet. So this is not a resumption attempt yet. Did this bar go beyond this bar's low? It did. So I'll call this as the first resumption attempt. Resumption attempt reassess. Oh, sorry. One or the first resumption attempt. Oh, I spelled it wrong. And L. Brooks calls this as L1. Is this much clear?
Okay.
Okay.
Suhas, you should be clear. He knows this
Yeah,
already. Yeah.
I got this.
So L. Brooks calls this as L1 or low one. It's easy to call it as RA, resumption attempt, first resumption attempt, second resumption attempt, but it gets difficult if you don't know H1 and L1 because few things are easier that way. For beginners, it's easy to understand this, but remember H1 is the first resumption attempt for a bull breakout on the upside. L1 is the first resumption attempt for the bears on the short side.
But in the course, he says that this L1 and H1 is not necessarily breaking out. It is just a
If it's a
attempt.
micro pullback, then it works. That is why he says, okay. Do you remember him saying if within 3 bars the pullback is complete, that is the strongest kind of pullback? That is what I have done here. I have took the 3 bars count and call it as micro pullback and the spike continues. So within that spike, you can trade it for H1 or L1 because it's still in a strong momentum phase. Once pullback actually sets in, then you have to wait for H2 or L2 because that is only high probability. For it is 60%. Here it's high probability because it's still in a strong breakout momentum phase.
Okay.
See here also, I'll tell you how to trade those later on. But if you see here, this was the pause bar 1, 2, 3. Even the third bar did not go beyond this also. So even if you get H1 here, you don't have to trade. Wait for a breakout or a H2. Here,
This pause bar was the bar where you have written MPB. This,
this
yeah, this is
MPB, this
yeah,
pause turned into MPB. But what is the current price action? Suppose we are here. This is again one more pause, right?
yeah, okay,
So we have to categorize this into MPB or PB to know where the spike is ending. Why do we
okay.
need to know where the spike is ending? Because we have to change from strong momentum breakout trading to wait for a pullback second resumption H2 or L2 to trade it. So this is again a pause bar. So we will wait to see what will happen to categorize it into a pullback or a micro pullback. 1, 2, 3 bars passed. There was no trigger of H1 also. There was no violation of this fire high also. So there is no way for you to enter. Suppose this bar went beyond this bar and you entered on a H1. We will see how to trade those also, backtest those also, and collect the data and see where to place the stop loss. Do you have to place it all the way down here, or is there some way else you can do that? All that we will see later on. But just the basics to understand. Suppose this bar went beyond this bar's high. We'll call this H1. And I am assuming that this bar, since it went beyond this point, might go beyond this point and give me a micro pullback instead of a pullback. Why? Because this is still in a strong momentum. I don't know when it will end, but still I have to take this trade because it's giving me a H1 and we still haven't categorized it. I'll teach you how to manage it and how to place your stop loss and all later on, but just explaining. But did it go? It didn't. The next bar, this is where H1 happened, but we are already past 3 bars, so there is no, you know,
Where the
eh,
H1 happened?
no, it didn't happen here. I'm saying for assumption purposes, suppose this third bar went beyond the second bar's high, then that is H1.
Okay,
Yeah, and why should I enter on that H1? Because this is still in a spike phase. I don't know if it's a pullback which is set in, or a micro pullback. And since it went beyond this high, within that bar, if it goes beyond this bar also, pivot also, then micro pullback is the structure and the spike continues. So that is why I would enter there. Don't get confused right now because it didn't. I'm just explaining, for example. Okay. 1, 2, 3 bar passed, and next fourth bar, fifth bar went beyond the bar high, previous bar's high. So this is H1. Don't get confused again and again. So this is H1. The sixth bar broke out. And observe if the breakout of the pivot is happening from bar 4 to bar 6, it is a good trade again. Just keep in mind, I will explain more later on. This is just an intro class. It turned into a deeper discussion class, but I hope Suhas is understanding everything.
Okay.
Since it took more bars, we will call this as pullback. Here there was no trigger of H1 within the 3 bars, right? If it did trigger within the 3 bars, 1, 2, 3, suppose this third bar went beyond the high of this bar, then H1 would have triggered. I would have taken that trade and put my stop loss using ABR or ATR or some fixed scalp, let's say 5 points or 10 points, or put my stop loss all the way down here, whatever it may be. And then I should have managed my trade accordingly, right? But it didn't go. So once it didn't go beyond this high also, and the third bar has passed and it didn't go beyond the pause bar, I'll call this as pullback. So spike phase has ended. Now how should I trade? I should either look for a breakout within 4 to 6th bar after the pullback set in. 1, 2, 3, 4, 5, 6. So this was the 6th bar. So this was the breakout. I would enter here and then trade it. Or if this didn't go breakout after 6 bars also, then wait for a H2, the second resumption attempt.
Okay.
Now, I still haven't told you the pullback depth, strength, and how to categorize them. I haven't told you how many MPBs within a micro pullbacks within a spike can affect the next spike. Nothing yet, but I hope you understand in general what I'm trying to say.
Okay.
So, is this much also clear for you?
Huh.
So,
Somewhat
the
confused. Like if you give me notes, then I'll go through it. Like
yeah, I'll send it to you. And don't worry, this is just a terminology class. Like you have to get used to the terminology. Even if I give you the notes and even if you read it, you'll again get confused again. That is how
got
trading
it.
is. Yeah. So don't worry that much. I'll still send you the notes.
Like you'll anyways teach this again like once.
Yeah. This is just a
So, yeah.
introduction to things. Now, what is MPB count? Suppose within a spike, there were three MPBs, 3 micro pullbacks. Then MPB count is 3. If it was 4, it's 4. If it was 5, it's 5. If it was just 1, it's 1. If it was 0, then it's 0. Why? How 0? Let's say this was also a trend bar instead of a pause bar. 1, 2, 3, 4 breakout bars. This was the pause bar. The count exceeded 3 to go beyond this pivot. So this pause becomes a pullback. So there was no micro pullback within the spike. So the count, how is it relevant? We will discuss later. But basically MPB count you understood, right? The number of MPBs within the spike. Now retracement count is how many resumption attempts was there. Sorry, resumption count means how many resumption attempts were there. First resumption attempt, second resumption attempt, third resumption attempt, fourth resumption attempt, and so on. Now what is a micro channel? A micro channel is the strongest breakout phase. I'm not saying a spike phase, I'm calling it specifically a breakout phase. Here this breakout phase was 3 bars. This was the pause bar. But then I included this pause bar in the spike phase because this turned out to be a micro pullback, not a pullback. That is why the spike has extended. If I have to only mark the breakout phase, this is where I would, because 1, 2, 3, only 3 bars are breakout bars. And I'm saying the strongest kind of breakout phase is when a micro channel is getting printed. What is a micro channel? This is the first bar, second bar, third bar. The second bar is closing beyond the first bar's high. The third bar is closing beyond the second bar's high. Also, the second bar's low is above the first bar's low. The third bar's low is above the second bar's low. When does the micro channel end? When the low of the previous bar gets violated. This is where it got violated. This low didn't get violated, this low didn't get violated. Sorry, this low didn't get violated, this low got violated on this bar. If it was a bear spike, high never got violated. When did the high get violated? Here. It's reverse of bull, right? So high violation is where the micro channel ends. Why do I call this as the strongest phase? Because even within this time, even within the breakout phase, it's the strongest kind because the retracement is very small. It's not going all the way down here and then rising up. Just keep the definition in mind for now. I'll explain much more later on. Microchannel means the low doesn't get violated in the bull microchannel. Low, 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 low got violated. And also high should be closing beyond the high of this bar. This bar should be closing beyond the high of this bar. This bar closed beyond the high of this bar. This bar closed beyond the high of this bar. So is this much clear?
Yes.
Now, this spike can be categorized into three kinds: a strong spike, a decent spike, or a weak spike. I'll explain how to categorize them later on. Right now, just remember they can be categorized into strong spike, decent spike, weak spike. And what else is there? Okay, pullback structure. Let's not get into that. First, let at least 1 month pass and then we'll come to the pullback structure, because explaining this in detail in the further classes will take a lot of time. What else is there? Okay, that's it for the introduction class. So if you have any doubts anywhere, just ask now, because introduction class is very important. The basics definition should be clear. I know you'll get confused, but identification, or if I'm not explaining something properly, please let me know, because it's very important later on. So you both have no doubts, right?
No. I mean,
Okay.
share me the recordings so I
Yeah,
can go
I'll put
through
it
it
on.
if I'm.
I'll post it on YouTube anyways. Yeah,
Hmm.
I'll post everything for free on YouTube till the starting of week 2 first session. Everything is free. After that, only for you, those who have paid, I'll separately share, because everything I cannot give for free.
Okay, good, yeah. Okay.
Yeah.
In
Okay, guys.
this pullback, this H1 you will count when the high of the pullback is broken, correct?
High of the previous bar is broken.
Yeah, high of the previous, any of the previous bar.
Not any of the, right before.
Yeah, right before. Okay.
Yeah. See here, this was the pause bar. 1, 2, 3 count passed. So this is a pullback, not a micro pullback.
Okay.
This was the first bar which went beyond the high of the previous bar. I'm not saying whether it should be a bull bar, bear bar, nothing of such. Just
Okay.
a basic, basically make him understand everything. I have to go from basics now. So this was H1.
Okay.
This bar went below this low. So again, this was the second attempt. I haven't come to the second attempt. That is why I didn't tell the violation of law. Let's not confuse him. On the first day, I guess he is already confused as is. And this is the second resolution attempt. So this is the H2.
Okay. Okay.
Yeah. And here if you see 1, 2, 3, 4, 5, 6, this is the seventh bar breaking out. Here it was a sixth bar breaking out. If it happens on the fourth bar and the fourth bar is closing strongly, that's a good trade actually for scalp.
Okay.
Anything else? Also for Ishank, I guess, yeah, if you want to do the drills, you can, but if you don't want, start doing the drills from uh, third week or third day of the first week.
Drills.
Yeah, there are drills, so many drills to get
What is
eyes used.
drills?
Okay, for example, tomorrow, every breakout bar and the consecutive bar, if it's a follow through bar, you have to mark that. What do you mean by that? Okay bar, this was a breakout bar. So either one being a breakout bar and in the same direction, you will mark that. You will mark that with a up arrow. A bear breakout bar, but it didn't go beyond the low. I'll explain how to categorize everything, but tomorrow's drill, let me tell tomorrow. No, let's not do everything at once. Like that, you have to mark every consecutive breakout and follow through. This was a breakout bar. This was a follow through. Minimum follow through is what Elbrook says.
So
Minimum
so
follow through.
tomorrow we will have a class, correct?
Yeah, it will not take 1 hour. It might take 10 minutes for me to explain, but then we will sit and do the some part of the assignment together so that you guys get used to it. For you, it will be easy. For him, since he's a beginner, it will be much difficult, right? So, uh, let's say 1 hour class, and then there will be assignments. We'll have to mark out every breakout and follow through on 1 minute time frame for at least 5 or 10 days. I have in the assignment I have told 10 days. If it's too much, then at least 5 days, 1 minute time frame, every consecutive breakout and breakout and follow through bar you have to mark with the arrows and then submit it to me on the next day so that I can review and correct it later on. Why is this important? Again, if I give everything out for free, it won't be nice because there was one more guy, if you noticed in the group, he left because he thought I'm repeating only what Elbrooks has said. Yeah, it is what Elbrooks has said, but with so much nuances that even Elbrooks, although he has told it not in a way that I'm going to tell, but what I was trying to say is within the spike, if you see a counter trend, breakout and follow through bar, based on the strength and depth, you can you can understand whether the trend is going to end without getting a second leg up or it will continue to consolidate and then actually give a second leg up or reverse or how to sell on the limit orders. It's too much data to just tell theoretically. Let me go through the course so that you can understand better. I still haven't explained what is climatic price action within the spike. At least you know what climatic price action is. So for everything to be put into his brain in Monday, it's not possible, right? Yeah.
So tomorrow, what time we will have for this class?
So you both decide. I don't think. Okay, tomorrow we can either start from tomorrow or Monday. You guys decide.
Yeah, Monday is okay. I think Sunday is the off day.
Yeah, Sunday is holiday, but that's why I gave one of the weeks in I don't know which week as the entire week as a holiday because there is actually no holiday. You will have so much assignments. For you, the drills will be very important from first week's third day because you have some experience. You will be able to see with a new light, okay, this is how pause bars are. I'm giving too much away for free also. I don't know. Let's see what happens because you cannot ask them to pay me for the course without showing what the course has, right? At least something I have to give for free. So let's see. So from third day, it will be very important for you. For him, everything is important. There will be no rest actually. The rest week is somewhere. Let me. Where? I think I sent you the course content, right? So in that 1 week, I have marked as free. Except for that, every day at least you have to do the assignment for 1 hour. It's up to you if you want to take the Saturday and Sunday off and do more during the week so that you can complete the assignment. Why I want you to complete the assignment is because you'll train your eyes to see better. You don't have to sit and mark every micro pullback, and draw rectangle boxes around the spikes to understand it, right? It's much easier and clearer to trade without those drawings. You already
Okay.
have a lot of things to see, so why again populate the chart? I even made an indicator which indicates that micro pullback and pullback, but it's still work in progress. Some corrections are still pending, but it does the job pretty well. It's missing out this breakout, so that have to mark correct. But here, from here, if you see, this was a micro pullback one, it went beyond. This was a pause bar one, like that. It is marking out properly, but few errors are still there, so that is why I didn't give it out. Let's see. It's better to not use any indicator, but it's doing the same thing which you do when you're thinking and trading. I just wanted to reduce the burden for Suhas and Shushmita because they are very new. So at least some thinking parts can be mechanical and they will decide while trading the other parts. Since I still have 2 months time for them to get started with trading, I'll take my sweet time to get away with the indicator. Right now it's not complete and it has many errors actually. So yeah.
So the course will start from November, you have
No, no,
said.
no. The course has already started. I mean, now it started from the intro class, but Monday the drills will start. You can trade,
Okay.
but those two are not supposed to trade because they don't know anything. They haven't done Elbrook's course.
Okay,
So
so
with
this Monday we will do this markings, huh? This
yeah, drills will start.
drills.
Yeah,
Okay,
with that
okay.
you can trade. You anyways have experience. You trade. For those two, there is no trading till 2 months of the course. So they will start trading from November. The two with demo, like only one minimum quantity, testing which strategy best suits them. Because although I said only breakout follow through and pullback systems have been taught, I have three systems within them. One is micro pullback trading, breakout within 4 to 6 bars, and then again pullback H2 or L2, depending upon the various categorization and all. Except for this, again, you can trade it like many other systems are also there. For you, it's easy to understand because you already know the terminology. For you, I'll teach those, but for them, only those three.
Okay, okay. So this is all, I mean, this all major trend reversal, everything is in this, in your
Yeah,
system, you have included already in this.
yeah, but I won't be teaching that to them. I'll only teach that to you because they'll anyways get confused if I tell all those things. For them, it's best to trade one system. I'll give them option trade three with the minimum quantity for 2 months. Record every emotion, record everything, and give me that trading data so that I can assess which is best for you and trade only those. I mean, best for you in terms of number, I can tell,
Okay,
but
okay.
in terms of psychology, they should be used to know. For me personally, I like breakout and high probability setups. That is why I scalp most of the time. But swing, I actually want to get into swing trading more because in the long run, it's more easier to handle and it's more profitable than scalping. My win rate is not high as 80%. Somewhere it varies from 65 to 70 all the time. So I'll have to take many trades to reach my monthly target or whatever target I have put. Swing trading does that better and it also exceeds
Okay,
my
understood.
trading goal.
So
Yeah.
Monday we will see how to
Yeah.
make trade.
So that's it, right? So as if you have any doubts, ask them now. Hello.
Pardon?
Suhas. I'm calling Suhas. He is muted. I think he went somewhere. Okay. Anyways, that's it for the day. Let's take a leave then. Thanks for attending the class. See you guys. Bye.